Oh, uh, Raj. Okay. Okay. Well, without any further ado, dear ladies and gentlemen, it's a great honor and pleasure to partner up with EY today to discuss the implications of the Indian budget with you. On behalf of NICCT, I would like to thank EY and especially Erwin Sieders and Amit Jain for hosting this event together with NICCT and for bringing invaluable input and expertise to our members. On February 1st, 2022, the finance minister unveiled a progressive budget that laid the blueprint for growth of the Indian economy over the foreseeable future. The finance minister was quite clear about her intentions of steering India towards sustainable and inclusive development by providing a strong support for several sectors of the economy and a special focus to emerging sectors like solar power and electric vehicles and infrastructure. This budget also sets its clear focus on strengthening the digital sorry, strengthening the digital infrastructure by leveraging technology across areas such as health, ecosystem, education, skilling, financial services, and compliance. I will not tell you anything about the opportunities that lie within that budget for foreign investment and foreign companies. I will gladly leave that to the experts of EY. But I would like to briefly point out some other numbers about India's consumption, import, and export. The total consumption is estimated to have grown by 7% in 2021 and 22. Government consumption is estimated to grow by a strong 7.6%, surpassing pre-pandemic levels. Private consumption is also estimated to have improved significantly to recover 97% of the corresponding pre-pandemic output level. Investment is expected to see strong growth of 15% in 2021-22 and achieve full recovery of pre-pandemic level. Investment to GDP ratio has risen about 29.6% in 2021-22, the highest in 7 years. India's merchandise exports have been above 30 billion US dollars for 8 consecutive months in 2021-22, despite the rise in trade costs arising from global supply constraints. Imports are expected to grow by 29.4% in 21-22, surpassing corresponding pre-pandemic levels. Now, why am I telling you this all? The huge international Indian market, the developing Indian society, and growing need for products, know-how, and implementation of know-how on the topics on which the Dutch are world leaders, such as agri, food, water management, and infrastructure. There is a specific reason why I'm mentioning infrastructure, but Amit will come to that, create great opportunities for Dutch businesses. The current development in India, the growing market, and the stimuli to produce in India with public-private partnerships means that Dutch companies, government, and academia should continue to do business in India, which will not only bring benefit to development in India, but will also enlarge the market for Dutch companies. as the pandemic is coming to an end, the focus should be on India. NICCT, together with specialists in India, will help you connect to the right people in order for you to do business successfully in India. 20 years ago, NICCT was founded with the purpose to inform, inspire, and influence SMEs and entrepreneurs in the Netherlands to be well informed before making plans to go to India, to inspire them to make their plans, and to influence relevant parties in the Netherlands as well as in India to support business on both ends. We are justifiably proud that we can continue to provide this support on both sides of the corridor, and that we can and will make use of reliable, excellent, and efficient partners to give our members the best support in their endeavors. If you are ready to develop your business in India, get in touch with us and we will gladly connect you to the relevant, reliable partners. And now I will gladly give the floor to Erwin Sieders. Please, Erwin.
Thank you, Edith, for kicking this off and the great introduction on India, but also underlying the very important role the NICCT plays on the Netherlands-India business corridor. On behalf of EY, I would like to welcome everyone to this event. We're very pleased to have such a great crowd for today. My name is Erwin Sieders. I'm an international tax partner with EY here in Amsterdam, but also a board member of the NICCT. I'm very pleased to co-host this event together with the NICCT and my tax colleague from EY India, who also heads up our Indian desk in London, Amit, Jain. In the past year, I think we've seen a huge growth in India, in particular in terms of startups and scale-ups, IPOs, but also many foreign investors investing a lot of money into India. The number of unicorns in India the last year is mind-blowing, in particular compared to the rest of the world. From a Dutch perspective, we see a lot of significant opportunities in India in sectors like water, infrastructure, healthcare and life science, agriculture, tech and energy, but also the green economy, as mentioned by you, Edith. So I'm not only anxious to hear about the 2022 India budget has brought us this year, but also to learn about the attractiveness of India, how it's getting out of the COVID pandemic, and what exciting opportunities it may bring for Dutch companies. Amit, over to you. You're still on mute, Amit.
Sorry, this has to happen one time, right? Hopefully everybody can see my screen. Yeah. Is that visible? Okay, yes, excellent. It is. Thank you very much again to Edith and Erwin for this great opportunity, and I'm very glad to be here. Good morning to all as well. I'll jump straight to our agenda for today. We'll talk a bit about what was the backdrop to the budget, the situation domestically and internationally. Talk about some of the policy announcements out of the budget, which quite a few touched briefly by Edith and Erwin, and we'll go in a bit of more detail. We'll go through the tax proposals on direct and indirect tax sides, and then wrap this up with what we are seeing as the key attractiveness of India as a country for foreign investors, especially Netherlands, and then what could be interesting really. So with that, let me straight jump into the backdrop before the finance minister presented the budget. As you know, with the pandemic, there was a lot of push across Asia Pac, so ASEAN countries and India, to kind of make the most out of the supply chain disruptions, looking at more diversified supply chains, and everybody rolled out the incentives to attract new manufacturing or services, and India had this successful launch of production-linked incentives. And just to give you the exact kind of a perspective how this scheme has received by foreign investors, India used to be number 5 in mobile instrument manufacturing about 5 years back. Today it's number 2. Mobile manufacturing and various component manufacturing was one of the key sectors within PLI in the very initial years, which has really promoted a lot of foreign players the likes of Foxconn and others kind of to come down and set up facilities. So this is a scheme which is we've seen good kind of outcome out of that. There has been a more tangible improvement on public sector privatization. We saw the biggest privatization, Air India. EY was happy to kind of support that transaction. So I think this has been one area where government has not been doing much, but I think the Air India IPO, the Air India privatization was a great step. And we already are talking about the largest public sector insurance company, LIC, IPO coming in the coming months. So I think there's definitely improvement. On indirect transfer, which has been one of the, for international investors, a sore point, because it keeps coming up that India did these retrospective changes. As you would know, the current government has time and again said that we don't like retrospective changes and we don't want to make. They did finally almost undid. All indirect transfers prior to 1st April 2012, when the legislation was originally introduced, will not be subject to these rules. So it's basically making it prospective, which I think is a great step, and bringing more confidence to foreign investors. If you look at what India, corporations or multinationals in India, what they've been doing, and then Erwin mentioned that we saw a record number of IPOs, public offerings from large startups, record number of unicorns. I believe the number of unicorns in India were highest after the US in the last 1 year. We've also seen a good takeoff from the local or domestic venture capital industry, which also gives you a bit of perspective on the fact that it's becoming a bit sustainable and not reliant only on foreign direct investment, making it a bit more solid in some sense. There's more and more focus towards ESG, which is again great news. We've seen a lot of action towards more employee partnership, again, with the more and more challenges to retain employee, etc. Also, we saw a lot of global developments in the backdrop, and Erwin, if I can ask you to jump in here, because India is no different from any other country. So if you want to come.
Yes, thank you very much, Amit. Yeah, so we've seen obviously over the past year, thanks to the push of the OECD, but also the EU, a huge push on the BEPS project, on trying to tackle global tax evasion and avoidance. Most recently, Pillar 1 and Pillar 2 have been introduced. Obviously, Pillar 1 more focusing on tech companies, whereby a particular thing, the American tech companies will be hit, but also Indian and EU tech companies. Pillar 2 will be ultimately more relevant for many, many multinationals, not only in terms of tax compliance, but also in terms of mapping out and scaling out their worldwide tax profile. Where do they pay tax? Do they meet the minimum taxation? What kind of compliance burden is coming ahead of it? So on Pillar 2, I know that the European Commission has launched a draft proposal. So most likely the EU, all EU member states, but I think also the UK, will embrace it. Any thoughts on that from an Indian perspective? Will India also fully embrace this Pillar 2 initiative?
Yeah, absolutely. I think in some sense, a lot of the Pillar 2 initiatives is what India has been harping for a while. So we expect domestic legislations to come in. Obviously, we still have to wait for the detail and how would they interpret. It's always interesting to see the Indian Tax Authority interpretation in this area. But I definitely expect, and I think, Erwin, you made a great point that Pillar 2 is far widespread, and don't go by the 750 million threshold, because some of the local rules on subject to tax, etc., might be applicable, to even smaller corporations, entities. So that definitely, is going to be relevant.
So from that perspective, I know that in India, sometimes certain regions offer tax incentives, tax holidays, etc. So how does that impact the Pillar 2 initiative, the minimum taxation initiative that is being forced upon by the EU?
So I think most of the 0% CIT benefits have gone away. The benefits now available are typically all getting you to a 15% CIT, corporate income tax or above. So we don't see much impact out of that. There are obviously other incentives from a cash incentive or indirect tax perspective, but these are they may not generally bring down your effective tax rate, but give you cash benefit or better IRR. It still might not get so impacted from a pillar 2 perspective.
Okay, that's good to hear. Thank you.
Right. So obviously, I mean, as you know, and we continue to see the challenges. Inflation was one of the biggest challenges as the finance minister was looking to present the budget, and then obviously increased cost of supply chain. With that backdrop, what we saw in the economic survey was quite heartening. It's looking FY23, the Indian economy is expected to grow at 8.5%. In the current fiscal FY22, expect to grow at 9.2%. This is the fastest growing economy as per IMF for the next 3 years. So that's interesting. There's been interesting growth across sectors: agriculture, industrial, and services, all growing significantly and higher than obviously 2020, pretty much at pre-pandemic or higher than pre-pandemic rates. There's been increased investments in capital formation. The foreign reserves are almost equal to 13 months of imports and then higher than the external debt, which also gives comfort to foreign investors on the depth of the economy and the strength from a macro perspective. It wasn't long ago in 1991 where the country was struggling to do any imports, and today they've got a fairly solid forex reserve. As I mentioned, it's been an exceptional year for capital markets in India with over 12 billion raised. In fact, we are seeing more and more tech startups which had initial plans to do foreign investments are looking at India investment, given that the market has picked up so much. So with that, what did we hear on policy investments? I think the first and foremost, there's almost a 35% increase in government spend on infrastructure, which is very, very interesting. And this has been one area where the government has been spending a lot, and I think this gives you more confidence that it's a focus sector. Obviously, throws a lot of opportunities for public-private partnership as the government continues to look at ways to kind of meet their targets to increase and improve the infrastructure. So whether it's number of ports, airports, roads, highways, privatization of railways, these are all opportunities for multinationals to partner. There are specific sunrise sectors which are artificial intelligence, geospatial systems, drone technology, semiconductor, space, genomics, pharma, green energy. Have been identified as a focus sector, and the government will contribute towards the research and development in these sectors and also incentivize. More details are awaited. There's going to be a push to do a 5G spectrum auction, so 5G technology to be introduced. There's also a mention of a digital currency to be introduced by the central bank. So that's still wait and watch. Data centers, which again are becoming more and more important. There is a talk of giving it infrastructure status, which would essentially mean it'll be eligible for a bunch of incentives and fast track in terms of clearances, etc. On the clean energy, as I mentioned, there is a specific push and couple of things where the government is kind of incentivizing private investment is incentives for high efficiency solar modules. So there is an incentive of 2.6 billion provided for new investments in this sector. For electric vehicles, there's a plan, especially in metros, which are, as you know, pretty crowded, to have a battery swapping policy. Again, it creates a huge opportunity for multinationals, given India doesn't have adequate infrastructure or experience in this sector to kind of look at this. GIFT City, which is the International Finance Service Center set up in India and already has various incentives to financial services sector setting up, whether it's banks or stock exchange, stock broking. Now they've further extended this to international arbitration centers. So you could set up an international arbitration center in the IFSC, which are eligible for various tax incentives. There are also measures to incentivize capital raising for sustainable financing. There is a mention of a green bond to be issued. There's also a mention of foreign universities allowed to set up campuses in GIFT City. I think this will be quite interesting, especially with the movement that we are seeing between India and Europe, and more with Netherlands and Indian students attracted to that sector, which creates a great opportunity as well. Uh, and maybe Erwin, if I ask you to comment here, how you see some of these policy investments from the Netherlands India corridor perspective.
Well, first of all, I would see a lot of opportunities for certain Dutch companies to cooperate with local Indian companies on certain areas, in particular on, say, on 5G, but also on battery swapping policy. We have a couple of interesting battery companies, startups in that respect. Obviously, we have many universities that already are linked with universities in India, so I would expect them to try to increase that cooperation as well. Interesting point on the infrastructure. I think today the local financial newspaper here in the Netherlands, the government actually announced to restrict the number of data centers in the Netherlands. But that seems to be different in India. So maybe there are also opportunities there as well on people who know how to develop and roll out data centers in the Netherlands, ultimately into India.
Thank you. So with that, if I move towards the tax proposals, so starting with the tax rates, we didn't see any changes for corporate taxpayers, for individual taxpayers. So individual tax residents in India or non-corporates, they've reduced the surcharge on capital gains, which was going up to 37%. They brought it down to 15% in line with other taxpayers, corporate taxpayers. So that's welcome news. So the long-term capital gains tax rate is brought down, to 11.12% from 14.25%. No other tax changes. On the incentive side, as I mentioned, India had introduced 15% corporate tax for new companies setting up manufacturing operations in India. There was a sunset clause that you had to set up the operation before 31st March 2023. They've extended that to 31st March 2024. And just to clarify, you have to set up your operation by this date, commercial operations, but the benefit of 15% CIT, which effectively is 17% with surcharge and cess, is for lifetime. So it's a lifetime benefit once you set up these operations, for new manufacturing activities. There are certain profit-linked exemptions for startups in India, which has been also extended to 2023 from 2022. So, startups set up in India and meeting certain conditions are given exemption from, taxation. So that's got further extended. This obviously has been the talk across the world on virtual digital assets or cryptocurrency or crypto assets, etc. So India's been one of the few countries. Obviously, we've seen similar legislations in UK, Australia, etc., to introduce the tax on transfer of virtual digital assets. So it's virtual digital assets, so far wider than crypto assets. It could include NFTs, digital coins, or whatever. So there's a 30% tax on that. There's also a tax if there's a gift of such assets. At the same time, there's a withholding tax on the recipient or the buyer of these assets as well. So again, to me, this is somewhat giving a bit of recognition because there has been the talk in the last few years in India, especially, that the government might ban crypto assets. So I would say that bringing a tax on it is somewhere accepting that it's an industry that we need to recognize. So I think that's on the positive side in some sense, and then obviously we'll see how other countries look at this area as things develop. Erwin, do you want to kind of jump in?
No, it's quite interesting. The Dutch government is now working to try to redevelop our so-called box 3, so a kind of our income on asset levy here in the Netherlands. And I'm just wondering how India is intending to tax cryptocurrency if everything is through the internet, all encrypted. How do you do that?
Yeah, no, it's a great question, and I think it's a challenge for every country. I mean, they've obviously put in a obligation to withhold taxes by the resident buyer, and then obviously if you would expect the buyer to comply with it to avoid any penal exposures for himself. But yeah, I mean, if if both the parties decide not to comply, there's no way to really catch that.
No.
At least today.
Yeah, no, exactly. Okay, interesting. Thank you.
Right. There have been some welcome developments on controversy side. Basically, they've introduced a proposal to say that if there's an issue which is pending before High Court or Supreme Court, and the same issue, even for a different taxpayer, is pending, is to be appealed to the High Court or tribunal, then the revenue authorities should not appeal and should wait for the ruling of the High Court, Supreme Court. This is a great development, and I think it will really reduce the number of litigation, etc., and really bringing more consistency in the positions. So that's a welcome change or a proposal. There's some extension on timeline to file tax returns in India. Again, increased to 24 months, a welcome change to allow taxpayers to file their returns, if they've missed out on doing that. There have been some clarificatory amendments. So there was this debate whether the surcharge and cess, which is levied over and above income tax, whether that's deductible or not. In general, income tax is not tax deductible in India. There was at least some courts thought that a surcharge and cess is not income tax and should be deductible. The tax authority, the government is now proposed to clarify that that was never the intention. So there will be no deduction available. Similarly, there were certain anti-avoidance provisions which basically say that if you're earning an exempt income, then you cannot claim any expenses that you incur to earn the exempt income. So if you earn a dividend income which is not liable to tax, let's say, then you cannot claim exemption for any expenses, to make that investment, because the income generated is also not liable to income tax. Again, there were some rulings which said that you had to earn the income in that specific year to disallow expenses. So the courts, again, the budget has clarified that prospectively that is not a requirement. Expense incurred to earn a potential exempt income should not be allowed as a deduction. There are again certain clarifications on interest payment to be allowed on actual payment and not on a deemed payment, or when you convert a debt into a equity into a debenture or whatever, that will not be considered as a payment, and you need to make actual payment to claim deduction. Certain amendments on reorganizations, more clarificatory and welcome. When you do reorganizations wherein you succeed business as through a demerger or a slump sale or whatever, they've said that the successor kind of steps in the shoes of the predecessor for any compliances done by predecessor. So that's helpful. Similarly, they've allowed the successor to file tax returns, even if sometimes the process to do the spin-off might take longer. So they've extended the timelines for the successor to file any tax returns for the business that it's taken over. So again, welcome changes there. So the other tax proposals on the domestic side, if an Indian company had a subsidiary overseas, typically dividends distributed by the overseas subsidiary to the Indian company was given a concessional rate of 15%. That is planned to be withdrawn from 1st April 22 to bring it on par with, if there was a dividend domestically provided by an Indian subsidiary to an Indian parent. So that concession is going away before 1st April 22. So maybe Indian multinational groups could use this benefit till 31st March 22 if they have subsidiaries overseas and they want to repatriate profit to India. Certain other procedural changes around powers to commissioner to make revision to a transfer pricing order, which was not clear in law. Again, certain clarifications around refund of withholding tax, where the Indian party has a contract for gross of tax. It can approach the assessing officer to claim tax refund if tax is not applicable. certain other changes, more procedural around bonus stripping and dividend stripping when you typically buy and sell shares just before the dividend or bonus dates to make a capital gains earning or make a earning out of the change in value. There are certain anti-avoidance rules, so they've extended that to even infrastructure trust and real estate trust. So again, more procedural and clarificatory. There is a withholding tax introduced on perquisites provided out of business or profession. So any non-monetary benefit provided, that's subject to a withholding tax now. With that, if we jump to the indirect tax proposals, again,
can I ask? Sorry, can I ask one question on the previous slide? Yes. What also has recently came into light is the potential change of most favored nation clause under the India-Netherlands tax treaty.
Yeah.
So I thought of it may sort of tie into this slide.
Sure.
But can you elaborate a little bit on that, because that would be relevant for Dutch multinationals that have operations in it.
Oh. No, sure, and that's a good point, and let me give a bit of context, right? So a Dutch multinational or a company having investment in India and Indian company distributing dividends is subject to a withholding tax in India. So Indian company distributing a dividend to a Dutch shareholder is subject to a withholding tax of 20% as per domestic law. However, the India-Netherlands Treaty brings that rate down to 10%. It further says that, the India-Netherlands Treaty, that if there is a subsequently negotiated tax treaty with the OECD member country, then the 10% rate can be brought down further if there's a beneficial rate. And essentially, the view is that because there are subsequently negotiated treaty by India with certain other OECD member countries, this rate, is brought down to 5%. So any dividends from India to Dutch shareholders should be taxed only at 5% in India. Very recently, the Indian Central Board of Direct Taxes, this is not as a part of the budget, but pretty much hot out of the press 2 weeks back. The tax administrator issued a circular saying that they believe the 5% rate is not applicable on the basis that this most favored nation or basically borrowing a clause from a subsequently negotiated treaty needs a specific procedure to notify that, and also needs they believe in the interpretation is not correct because these other countries were not OECD members when the treaty was negotiated but became subsequently. But in summary, the tax authorities is essentially challenging the 5% and saying it should be withheld at 10%. Technically, we believe that is not the right view. We think 5% is the right view. There are high courts in India, the Delhi High Court, which has already confirmed that position. In fact, just a couple of days back, there was another tribunal ruling in India, which also has somewhat said that the CBDT circular, which I referred, is not the right interpretation of law. So while we expect some level of controversy, we still believe 5% is the right position that should be applied. At the Dutch tax authorities, and Erwin, you could add here, obviously, and the tax administrator have issued a decree to clarify this position. So we do believe, if there is a claim, one could explore approaching the competent authority in Netherlands as well to push this. So that's something which is pretty hot out of the press.
Yeah, no, and that's very relevant from a Dutch perspective, on the basis that if a Dutch company would set up an Indian subsidiary that at some point in time would be distributing or making a dividend, then that dividend would typically be exempt in the Netherlands under the so-called participation exemption, which also means that any withholding tax on such dividend is a true cost from a Dutch perspective. So the difference between 5 and 10% is pretty significant. And yes, I think from a Dutch tax perspective, it's pretty clear that the 5% withholding tax rate should be upheld. But it's not crystal clear from an Indian perspective. So that's good to know. Thank you.
Thank you. No, thank you for bringing that up. So if we jump to the indirect tax proposals, again, I think as we see in the past budgets, not significant changes because with GST and the GST Council, which brings in changes as and when required, there's not much to do. I would say the changes, if you look at customs duty, these are import duties, are more towards push to make in India. So discourage imports of finished goods, encourage making in India and imports of components to make in India, etc. There is a lot of steps around automation to filings being made online. There are certain procedural changes. There was, court ruling which said that investigation could not be made in a customs situation. They've clarified that those powers are available. Certain procedural changes around advanced rulings or private rulings, eligibility and period for which it applies, which is 3 years. On the goods and service tax, I think here one of the big changes, and for companies in India, this may be quite relevant. And again, we have to see more detail how they will implement this. But in summary, what it's saying is that if a supplier charges you GST as a customer and you're trying to take credit of that GST, the supplier should have actually paid the GST. If he doesn't pay the GST, then you don't get a credit and you will have to reverse it subsequently. Now, as a customer, I have no way to find out if he's paid the GST. All I can do is, know that he's, charged me GST and he's filed the relevant tax returns to show that against my, registration number, GST has been paid and charged to me, or charged to me. But there is no system. Again, we'll see how that is implemented, but this will be an important aspect and will have an initial impact. I mean, the government's perspective here is clearly to look into some of the fraudulent cases where, GST credits were taken without actually paying it to government. So they were claiming credits without, really their revenue ever going to the government. So this is going to be an important and a significant change. And then we would expect some changes in the IT systems on how GST returns are filed or what you get from the supplier to allow the customer to understand whether he's paid it or not. There are certain other relaxations on filing dates, clarifications on special economic zones, on their timelines to file a refund claim, which are more clarification in nature. So that's broadly the tax proposals and policy. What we thought would also make sense is to use that background and Edith mentioned that, etc. And we kind of jump into, with all that we are seeing, what does it mean really for, Dutch companies looking to India? What is there in the country with all that we are seeing? So first and foremost, if we look at the economic growth, and as I mentioned, and this is from the World Bank Economic Outlook, India is expected to be the fastest growing economy for the next 3 years. As you could see, it's looking at 8.7 and 6.8% growth in 2022 and 2023. Much higher than the world economic growth or some of the other countries, whether it's China, US, etc., or even the emerging markets. Significant investments on capex infrastructure, large forex deposits, large number of IPOs, etc. A lot of social schemes making it more inclusive, and there is a specific mention in the budget policy as well to kind of really making it a more inclusive economy and participation. And we'll talk a bit about some of the policies which have helped here. But maybe, Erwin, if you want to jump in and give a bit of perspective on some of these macro aspects.
Obviously, I'm not a macro expert by background, but this is I do think this is really interesting in terms of how India appears to come out of the COVID pandemic. Obviously, in 2020, you had a huge drop in GDP, but it seems that a full recover was sort of reported for 21 and even higher in 22 and onwards. So that's really, really impressive. What I've been really surprised at over the past, I think 1.5 years, are the number of IPOs in India. A lot of capital was attracted. A lot of local companies in India were stock listed. Obviously, that also happened in the Netherlands, but not only Dutch companies, also foreign companies. So I wasn't sure what the background is of all those IPOs and companies being able to attract investments?
So I think what we saw, as I think in a lot of other places of the world, there was a huge pickup in digital economy, right? So your service deliveries, your online kind of purchases, kind of shops, etc. And I think that sector picked up significantly, which also obviously needed a lot of investment. And they kind of thought that this is a great time. There was a bit of nervousness for the initial public offerings, but I think the valuations they received and the subscription, most of them were subscribed 2 times, 3 times. That just showed that there was a lot of interest in that sector. And as I mentioned, I think that's also linked with a lot of development in local venture capital industry, which has helped a bit as well. So it's not that this is purely dependent on foreign investments, but there's a nice mix which makes it a bit more stable. So I'd say that is really, so it's been, I think, great growth in these digital companies and need for investments, which promoted them, and they've all of them been fairly successful in that sense.
Okay, but very interesting to see. Thank you. Yeah.
So if we look at what makes India attractive, and again this was mentioned in the start of the session, it's almost 2x rise in consumption expected by 2025. Huge infrastructure investment, almost $2 trillion by 2025. Pretty stable monetary policy. We spoke about this, the forex reserves. There's a continued growth push on manufacturing through trade policy, through tax reforms. Significant reforms in the financial sector. We are seeing more and more bank privatization, deepening of debt markets, non-performing assets. We saw some of the insolvency laws which have come in the last few years, which has really made it interesting to kind of, one, obviously have a clear pathway to kind of remove non-performing assets, but also to kind of allow an opportunity for investors to look at that market. The government has also significantly invested in banks, especially public sector banks with large non-performing assets, pre-pandemic, etc. So again, large, kind of macro factors to make the local economy very interesting. And as I mentioned on the right side of the slide, you can see there's a lot of depth in the both when you look at foreign direct investment flows into the country, but also the local venture capital industry, which have improved the private equity backed IPOs, etc. Almost 44 startups achieving unicorn status in 2021. So these are all very, very interesting data points.
From my understanding, Amit, on the investment in infrastructure, that's obviously a huge amount of investments that India is intending to do. Do you see there any opportunity for foreign companies to join? Because obviously most of the infrastructure is all local, but
yeah, so absolutely. I think that's a great point. And the idea of the government, and they've said it time and again, that public policy alone cannot help India achieve what they want to achieve on infrastructure, and they invite private investments. So whether it's modernization of roads, where private investment is public-private partnership is promoted, and you get a payback through various ways. You're allowed to either collect toll or fees out of use of that road, etc., or other ways to monetize that, etc. Even recently, we've seen private players allowed to run railway lines, which has not happened, and they've actually. So it's interesting. The government railway business actually makes a loss, but the private players are actually making money out of it when they are running the railway lines. Obviously, there are a lot of social objectives when government runs the railways and how the fares are priced, which does not impact private players. But I would say there's a huge opportunity on highways, on infrastructure, ports, airports. Again, on airports, we've seen most of the airports being privatized, where private players construct it and then they get a right to run it for the next 10 years to make, monetize it and recover the investment, etc.
Okay, that's interesting. So I see a lot of opportunities for Dutch companies as well, not only for, say, pension funds and investments, but also for companies that have certain level of know-how and knowledge that they could share in a, say, joint venture in India.
Absolutely. And while you mentioned that, I would kind of reiterate the benefit for pension funds and sovereign wealth funds. And Erwin, you might recall we discussed this couple of years back. There are specific incentives available. So sovereign wealth funds and pension funds investing in infrastructure in India, they are not subject to any taxes on capital gains, dividend income, or interest income from those investments in infrastructure. So there is, again, I would say it's a measure to attract investments, because these sectors typically attract sovereign funds and pension funds because these are long gestation period investments. So again, for pension funds in Europe or Netherlands, this could be very interesting.
Okay, good to hear. Thanks.
We also wanted to share a recent survey that EY did with the Confederation of Indian Industry, and some of the highlights. If you look at it, more than 80% respondents, and these are 70% being non-Indian multinational groups, said that they are looking to make investments in India in the next 2 to 3 years, and 30% looking to invest more than $500 billion in India. 2/3 of them selected India as a choice. India made it to the top 3 choices, but 2/3 of them felt India is the number 1 choice. 50% respondents see India as the 3 economies for manufacturing. So a lot of positive growth, and obviously at the same time there were certain expectations from investors as well, where they feel government could do more, whether it's infrastructure development and faster clearances or trade reforms and policy. We've got the India-EU, foreign trade policy, which has been pending for the longest time. So there are definitely some ask from multinational investors in this area. And Erwin, maybe sitting in Netherlands and talking to European companies, maybe you want to kind of jump in on areas where we see potential improve areas where the government should be more focused in India.
It's, well, obviously, if you compare, I'm just a simple tax specialist. So if you compare the tax system in India with the Dutch system, it's not easy to handle from an Indian perspective. So that's where we would like to see, I guess, some improvement or clarity on certain procedures. But I do think that over the past year, in particular, in terms of discussions with the Indian tax authorities, local tax authorities, getting clarity on investments, that definitely has improved over time. It's just the way of doing business is sometimes not very easy. Let me phrase it like that.
Sure.
But there's a huge journey that has been undertaken so far to improve that.
Right. So I think if we sum up some of the tax reforms, starting from 2014, we saw a lot of improvements. We mentioned the bankruptcy code, the indirect tax kind of simplification with GST, a lot of foreign direct investment norms being eased, push on Make in India, public spending. We spoke about the budget 22. And the sunrise sectors, again, continued push on ease of doing business. Now, I would say that while there is still some part to walk, but if you look at ease of doing businesses, some of the statistics in the last 8 years, India has removed some 25,000 compliances and deleted or basically scrapped 2,500 laws. So there is definitely improvement. Obviously, there's still more to do, but there's definitely more and more improvement in that area. Even with post-COVID, there's a fair bit of push happening. So I think there's consistent reform across areas which one would think is necessary, and more engagement, I would say, with the investor community or with companies looking to invest into the country.
Sorry, Amit, and how about Indian companies looking to invest into Europe or say into the Netherlands?
Yeah, so I think where we are seeing, I will be honest that we've not seen very large investments in the last few years. I would say the very large companies in India making these is been very, very slow, really in that sense. But at the same time, the medium sector, companies have been fairly active, especially on export side, looking at exporting products into India, to European markets, or even a lot of technology companies. We continue to see, we've seen that in the past, but the likes of Infosys, Wipro, and so on, setting up developmental centers, setting up marketing centers. And I would say that it's, maybe 10 years back, it was just setting up some sales office, but it's no more that. Most of these companies now have 100, 200 or larger presence in multiple European countries, whether it's Netherlands, France, Poland, etc., to set up developmental centers, etc. So I think there is movement in specific sectors where we are seeing on outbound side. One of the Indian equivalent of Uber, Ola, recently set up a big technology center in UK. So I think we definitely seeing some movement there, overall.
Yeah, and on that last part, so that's interesting, because normally people would expect that India has a huge supply of engineers, tech people locally, etc. So why would you set up a tech center outside India?
No, that's a great point. I think what really is the objective is also to tap some of the more developed and sophisticated kind of R&D setup which is there, etc. And also, I think some of these companies are looking at this beyond the India play, and if they're also looking at it as a multinational player tomorrow to grow in various markets, etc. To have a much diversified portfolio, right, and access to talent which is more diversified as well. So you're right. There's no dearth of technology experts in India, but at the same time, I think the industry in some segments, while is doing quite well, but there are other areas where there's a lot to learn with what's happening in Europe.
Okay.
Right. If we move on, and what we wanted to do here is also kind of show the power of how everything is getting pretty much digital in India, and there are a few examples to give here. Aadhaar, which is India's identity for every individual platform. About 1.32 billion identity cards were generated. This is completely online, and I can tell you with this, pretty much every process which is online can be done with just quoting this number, and everything else is checked in the background without submitting any voluminous information anymore. The number of digital transactions through digital payment platforms are more than 4.6 billion in a year. The vaccination program, which was through a online platform, CoWIN, there was almost 1.73 billion vaccines. So this also gives you the depth of digital reach in India, and this is not in the metros and urban cities, but actually in the rural areas, actually in the small hinterlands. Everybody has a smartphone today. Everybody knows digital payment. Everybody is pretty much. I mean, one example, I remember 2 years back when India was looking to digitize its tolls on road. Right, there was kind of physical payment of physical cash, 2 years back, but they've actually managed to do that now. And most of the tolls, I would say, or 70-80% of the toll booths are now all digital. You have what you see very commonly in Europe. You have your digital card attached to your car, which just picks it up. Again, huge improvement. They've been obviously fairly smart in implementing this through whether it's through your mobile connection, your Vodafone or whatever connection, to kind of have that digital card issued to you, or through other means, or through your bank account, or through your insurance provider. So it's interesting how they implement that. But what is important to understand here is that the digital reach is absolutely mind-blowing in the country. And Erwin, maybe if you wanted to jump in here. And
no, this is indeed mind-blowing how you could encompass, if you like, a more than 1 billion population into a digital economy and sector. And particularly if we look at the local here in the Netherlands, whereby the Dutch tax authorities have huge issue with their own IT system, unable to change the VAT rate, for instance. But here in India, the rollout of the digital ecosystem is mind-blowing. And that's very interesting. I think we can learn a lot from it.
Right. So obviously, a lot of reforms on corporate tax. If you look at India, has got a pretty attractive corporate tax rate. Continued push on ease of doing business. There is, as I mentioned, a lot of incentives, and these are some of the sectors, targeted sectors, where government is providing profit-linked incentives. This could be 2 to 20% of your incremental sales or investments. A huge amount of money allocated here. And as you can see, sectors like drones, advanced chemistry cell, solar PV modules, these are all there, which if you make new investments, you could be pretty much recover most of your capital investment. In addition, you're also, eligible for various central benefits in addition to the PLI scheme, etc., based on your capital expenditure or based on your status. If you're in a special economic zone, there are warehouses where you could defer your input GST or customs and manage working capital better. Bonded warehouses schemes are available, etc. On exports, you're eligible for certain incentives as well. So if you manufacture in India and export, then you can get 2 to 5% of your manufactured sales value back from the government. There obviously exports are not subject to any GST, so any input taxes are refunded back to you. So again, a lot of central government benefits. In addition, every state in India is competing with every other state to attract new investments. So they are giving you as an investor various capital incentives, expenditure linked, sales linked incentives. These are cashbacks or refunds of VAT. Obviously, it's all dependent on location, quantum of investment. So if you invest in areas which are less developed, you get more. But there's always something. Even for small IT setups of 50 people or 100 people, you could also get some incentives. Stamp duty exemption, electricity duty exemption, etc. So what we wanted to bring out here is that give a perspective from a Dutch kind of industry and corridor perspective, that there is a lot of opportunity. There is a lot of incentives or cash on the table to kind of also explore, look at getting as you're looking at, your capital investments or even your IRR calculations, because this can hugely impact or benefit it really. And then maybe I'll with this pass to Erwin to kind of sum this up.
Yeah, thank you, Amit, for talking us through the budget 2022, but also the attractiveness of India. It's mind blowing. Frankly, I can't wait to jump on an airplane and go to India and see it for myself, so to speak. Hopefully, that will be possible soon. But I do see a lot of opportunities for the Dutch businesses and corridor to invest or to enter into a joint venture with Indian multinationals in terms of technology, agricultural, health, life science, AI, drones. I've seen very, very excited about the potential opportunity, but also the growth and the initiatives taken by India. I think, Edith, we do have time for addressing any questions that people may have. So maybe we can open up the floor or mic and see whether people have any questions for Amit.
Absolutely, and a big thank you to Amit and Erwin for the great and insightful presentation. It's brilliant how you show this in such a way in which we even understand it, because it's high complex. So the beauty of it all is to bring it back to simple minds like ours to understand it, which is amazing. So I would definitely encourage people to ask questions. I see a risen hand. Let me see.
That's me, Patricia.
Oh, Patricia, yes.
I saw Catherine asking a question in the chat box. during the seminar, so I would like to give her the floor. Catherine?
She's asking whether buying a property for starting up a company in India would be a good thing. As a non-Indian EU citizen and self-employed. That's what she's asking.
Right. So you could do that under a company setup in India, yes, but not as in your individual capacity. So if you set up and you can set up 100% owned company in India, and that company can in turn buy land as long as that is for the purposes of manufacturing or business activity. You cannot be engaged as a foreign company. When I say foreign company, a domestic company with 100% foreign investments into land trading or real estate activities. There is restrictions on that. But if you're purchasing land for the purpose of manufacturing operations or otherwise, or obviously you could do lease rentals as well. That's permissible.
Mm-hmm. Good morning. Thank you for picking up my question. I really appreciate it. So I just made some notes. Just to clarify, when you said 100% owned, so I could not be a shareholder of any other company. It would be 100% owned by me. Is that what you mean?
Yes, but I didn't understand when you say that you cannot be a shareholder of any other company. What do you mean?
For instance, if I would work together with another Indian entrepreneur and we would form a company together, and I would be a director of that company, and then being represented as the director of that Indian company, could I also buy something as a foreign individual?
Yes, under that company, so that company can be up to 100% foreign foreign owned, up to 100. But you could always be a joint venture, have a domestic participation in that company, and the company can obviously buy land.
And because you're saying manufacturing, I like that idea, but I'm not planning to manufacture. It's more like a company's address where there would be an office. And where I would conduct my business activities from, but I would also, register myself there as a residence. Is that a problem or not?
So as long as you're doing a business activity and not a real estate activity to buy and sell the land or make some whatever apartments to lease it, as long as you're not doing real estate activity, you can do all business activities. That's permissible. Maybe I don't understand when you say to become a resident, what you mean. That's a separate thing, and of course happy to kind of take it offline if that makes more sense.
Okay.
For instance, just to compare it with the Dutch situation, like I would, if I conduct business from a property, it would either have to be how you call it? There's something called a bestemmingsplan. So this property is declared for commercial exploitation. Or if I say, okay, I'm having an office there, I need to have a separate entrance. I need to have a very clear defined space for my business activity, but it could also be a part of a apartment that you live in. Yeah. So I'm looking for a place in India where I can work from, but I would also live in that place, since I would then probably get a business visa, right? I'm assuming that actually. So I'm wondering if that would be a problem to have purchase a property and then stay in this property as well as, let's say, my home. Yes.
Well, Catherine, can I interrupt you there, because we have some more questions and I will gladly help you further, but this is really a budget seminar. I hope you already got on your way, and we will gladly connect you to EY to further help you with your endeavors, and I'm sure they will find a solution to you. Thank you very much for your question. I would like to go to, there are two other questions, one of which is Marianne. She asks how to balance the image of India and the huge opportunities for the coming years. As we know, there is a gap between the brand India and the huge possibilities to invest. How to bridge that gap? But that's a challenging one.
Right. Yeah, I mean, it is. As I said, I think there is some path for India to walk to make it a bit more simple and easy for businesses to operate. But at the same time, as I mentioned with some of the statistics, there has been marked improvement, right? 25,000 compliances that have been gone away in the last 8 years, 2,500 laws scrapped. There is specific, kind of actions towards labor laws, new trade unions, etc., where they are looking to reform those areas. So I think the way I would put it is that the government clearly is open to engage, and we are seeing that engagement being fruitful. So there's a great opportunity to actually raise your issues and use platforms like NICCT or others to kind of engage. I think that's definitely showing more result. Is my view, but obviously, Erwin, Edith, please jump in. It's it's fairly broader question.
Well, we could talk about it all day, actually, but I think, yeah, what you said is very true. Erwin, I don't know whether you want to add anything to that.
No, it's obviously a very broad question, but I do think that over the past couple of years, India has made huge steps in improving the business climate. And again, the number of foreign investments into India has shown that definitely has worked, or at least has not stopped foreign investment into India. But again, having a good local advisor on the ground is always helpful and important in that respect.
Absolutely.
A little bit self-serving, but it is true.
So, and that stays as well. Well,
Yeah.
Marianne, thank you very much for your very interesting and challenging question. And we will continue to trying to answer that always. So that's one of the tasks that we're busy with, to improve that ease and to help people in bridging that possible gap. Jochem, you have a question as well. Would you like to ask it yourself? So please unmute yourself. Good to have you here.
Yes, thank you very much. Can you hear me?
Yes, absolutely.
Okay, thank you. Well, first of all, of course, Amit and Erwin, thank you very much for the presentation. It's getting sunny here, so I'll just try and move the camera so you can see me. So now, thank you very much for elaborating on this huge amount of information. I have a question related to the product-linked incentives. I noted this was mentioned a couple of times, and I presume this is giving more opportunities than before in India. And the question really is this also something that should, let's say, trigger Dutch clients? For instance, I'm in contact with a company that produces machines to manufacture pharmaceutical products. But then looking at, let's say, what's in there for them, how would these product-linked incentives, how could this benefit such a Dutch manufacturer of machinery? Is this something? Is there something they can do? Is there something they should be aware of, let's say, in the approach towards clients, both existing clients, of course, and new clients in India? Is there some, let's see, a unique selling point that has now come up due to these product-linked incentives? Should they change something in the usual pattern that they have in order for maybe their client in India to be able to benefit from these product-linked incentives, and that they should be aware of in their approach to the Indian market?
Yeah, very clear. Yeah, clear question, Jochem. Amit, is there an answer to that?
Right. So I mean, very specifically, to my knowledge, from what you explained, this may not fall under the list of the PLI production-linked incentives, specific industries. Having said that, as I mentioned, there are still a bunch of incentives, right? Especially if they're looking to set up shop in India. If they, as a manufacturing company, obviously, a new manufacturing company in India, they could be eligible for CIT benefits of corporate income tax of 17%. There are state incentives, and they could recoup back maybe anything between 20 to 50% of the investment back from the government, right, through VAT refunds and stamp duty refunds, etc. In addition, there may be some national or central incentives, especially if the way they do their operations could be something which is sustainable or green, because that's one area where the government is kind of encouraging investments, and if they're able to make a case that we are less polluting, or we are the machines that we are producing actually is reducing, let's say, again, I'm not a pharma expert, but I know API manufacturing is not the most green or pharmaceutical, these capsules are pretty dirty in their manufacturing process, if I can use that term. If they can show that, then I think they can negotiate some incentives. So I think it's the point I would make, the broader point. I think it's a great question, because there is ability, regardless of what is there in the policy, to actually, make a case and then try to maximize, your incentives and improve your IRR. Clearly, your client can, if he was to set up something in India, obviously it makes the supply chain more efficient, but also he's got ability to recover 20 to 50% of his capital investment from the government at minimum, and probably try for more if he can show there is some element of clean energy or sustainability in that overall process.
Okay, wonderful.
Okay, thank you. Could I maybe just add? Let me see. Struggling with the sun. So, what would be the definition of let's say new, in the sense that you could either provide, of course, machinery for, let's say, an existing factory and then expanding capacity or going into another area of products. Is there some definition of new in this regard? So would maybe the client have to address with the Indian counterparts, because the investments probably will be taking part in India by the Indian customer. So would the Dutch, let's say, the Dutch partner be aware about? It would maybe be better to develop an entirely new factory with some green advancements, and rather than looking at maybe renewing machinery in an existing plant. Is this something to think of? Yes,
it has to be new in that sense, as you mentioned, rather than just whatever packaging existing machinery as new.
Okay, thank you very much.
Perfect. Thank you very much, Amit. And thanks, Jochem, for the interesting question. Any more questions? I see no raised hands or anything like that. Now is the time to get the advice from the expert without having to make an appointment.
Free advice, maybe.
Free, even free, yes. Well, in that case, anyway, it has been highly, highly interesting, and there are probably lots of more questions that people have to think of, and just let it sink in and then get back and think about it. If you have questions after that webinar, please reach out to NICCT, and we will connect you to Amit and Erwin and their team to follow up on that. And again, I would like to thank Erwin and Amit very, very much for the brilliant presentation and also for taking the time to answer questions and being here today. This has become kind of a tradition that we do that. NIC does that together with NICCT. 2 years ago, we were at the offices in Amsterdam, which was lovely. Then last year, I was in the car, so that was a bit... that was a bit funnier. Anyway, I hope that this is our last online presentation, which does give some opportunities, but we are, of course, looking to having physical budget presentation next February with EY again, and then maybe hybrids to add whoever wants to join around the world. And so thank you very much. And we're also looking forward to having all of our members at our upcoming events. You will get some emails shortly. We are opening up, which is nice, which will also allow us to have physical events. You will get more of that in your inbox soon. Looking forward to seeing you all face to face. And thanking you all for being here today. Wishing you a wonderful day and successful business, and looking forward to seeing you soon. Thank you very much.
Thank
Thank
you.
you.
Thank you.
Bye.
Bye-bye. Thanks.
I keep the line a bit open in case people want to interact with each other. Okay? I keep it open for another 5 minutes.
Sure.
Yeah.
Okay, thank you.
Jochem, ik ben bezig met een ronde tafel.
Oké.
Dus we gaan naar Amsterdam toe. Dus ik denk dat je er wel bij bent, hè?
Wat ontzettend leuk. Ja, ik ben altijd graag van de partij.
Ja, dat dacht ik al.
Ja. Ja.
Yeah.
Yeah, maybe for the others, yes, in English. Catherine, you speak Dutch or you speak German and English?
Her image is frozen.
Yeah.
Yes.
But nicely.
Yeah, it's on the right time frozen.
Absolutely.
Maybe she logged off. So that then we can continue in Dutch.
Ja.
It doesn't look like so.
Ja, nee, de kunst is altijd om iets super ingewikkelds heel makkelijk te maken. Dat vind ik echt altijd erg knap.
Ja, het is jou gelukt vanuit de auto, dus dat vond ik al helemaal knap.
Ja.
Techniek staat voor niks.
I think the others are not listening anymore. Erwin.
Heel goed.
Ja, hartelijk bedankt.
Ja, super.
Ja, nee, het was leuk om te doen, Edith. Ja, nogmaals, het is gewoon fascinerend wat er allemaal gebeurt in India.
Zo.
Ja, echt. Ik bedoel, weet je, en dan denk je, iedere keer als je daar bent, nou ja, we zijn een tijdje niet meer geweest, en je bent daar en je ziet dingen, denk je van, wauw, hoe pak je dat aan? En als je dan ziet wat er allemaal gebeurt en wat er echt gedaan wordt, dan denk je van, ontiegelijk knap. Voor zo'n groot land, dat ze dat er allemaal doorheen krijgen. Wij zitten over...
Knoeien met onze corona-app en die krijgen we niet werkelijk. Dat hadden we nooit moeten doen. Maar zij rollen gewoon iets uit voor meer dan een miljard mensen. En dat werkt blijkbaar. Ja, dat is
ongelooflijk. En wij zitten te neuvelen in de Tweede Kamer of je idioot mag zeggen of dit soort dingen. Hè. Daar gaat er een heel Kamerdebat over. Ja. Nou ja, los van het feit dat je elkaar netjes moet benaderen. Daar ben ik het wel mee eens. Maar het gaat hier allemaal, dat gepolder hier is niet erg snel. En als je dan ziet hoe in zo'n grote democratie, want laten we eerlijk wezen, in een dictatuur is het makkelijk, maar in een democratie is het toch een stuk moeilijker. Ja. Hoe ze dat voor elkaar krijgen is echt razend knap.
Ja, super interessant.
Ja, wat ik ook zo knap vind, als ik het nou terugzie, hè, want ik denk toch dat je kan zeggen dat de afgelopen 2 jaar met het reizen, wat ik ook echt wel om me heen hoor, dat het lastig is geweest om in India zeg maar verder voet aan de grond te krijgen. Wat ik zo ontzettend knap vind van India, is dat ze bezig blijven en echt vooruit blijven denken van ja jongens, dit is een probleem. Wat gaan we nu doen? Hoe houden we die groei aan de praat die we gewoon nodig hebben om ons land verder te ontwikkelen? En ze zetten er ontzettend hoog op in. Maar komen ook met programma's waarvan ik denk, ja, als je dat goed, als je dat goed aanpakt, dan kun je daar ongelooflijk voordeel van hebben. Je kunt je voorstellen dat je iemand zegt van, joh, als je nu met iets komt, dan krijg je dus een soort perpetual flat rate van income tax. Ja, dat hebben we in Nederland geprobeerd met die 30% regeling. Maar ik denk, ja, als je daar toch op kan gaan sturen, dan ja.
Maar ook gewoon heel veel bedrijven in India die opkomen, uiteindelijk zelf sustainable zijn. Groot genoeg om de hele Indiase markt zelfstandig aan te pakken. En eigenlijk het buitenland bijna nauwelijks nodig hebben. Maar wel tot een unicorn status uitgroeien. En waarvan ik vermoed dat de volgende stap is dat ze naar buiten India gaan.
Ja.
En dat worden echt geduchte grote bedrijven. Dat is heel interessant om te zien.
Een stoomboot.
Behoorlijk oefenen.
Ja.
Met de grootte en zo. Dus bij ons houdt het natuurlijk al heel gauw op.
Ja, goed. Het is dan weer ons voordeel dat we heel snel de grens over moeten. Dus we moeten wel internationaal handelen en denken. Maar zij hebben natuurlijk een enorme grote afzetmarkt om mee te oefenen.
Ja.
Nee, dat komt binnenlands hebben ze natuurlijk ook de state differences. Ze hebben daar al. Dus het is natuurlijk wel één land.
Export, ja.
Dus ze moeten ook daar tax-wise en alles moeten van alles en nog wat gedaan worden. Dus ze kunnen echt gewoon heel goed oefenen voordat ze naar buiten toe gaan.
Ja.
Ja, en ik denk dat ze historisch gezien al niet anders gewend zijn om met uitdagingen om te gaan. De laatste ontwikkelingen zijn pas nu dat we zeggen van oké, dat het redelijk gaat stabiliseren. Maar in hun leven nu is het eigenlijk altijd al chaotiek geweest, waardoor ze moesten flexibel zijn. Dat hebben wij hier nooit gehad. We hebben chaos hier in Nederland nooit gekend, althans niet in mijn leven. Wel in die van mijn grootouders.
Ja.
En daarvoor.
Ja, bij hun is het zeg maar elke generatie heeft heel veel uitdagingen die ze moeten overkomen. Ja. En enorm veel mensen en groei in populatie waar je mee moet
van wordt.
Ja, daar moet je dan iets mee. En dat doen ze dan ook wel.
Ja.
Ja, we zijn hier verwend, hè, wat dat betreft.
Ja, dan wordt het, wordt het te makkelijk te verwennen. Maar ja, beste mensen, ik heb half een call. Daar moet ik...
Zo, nog 4 minuten om even koffie te halen.
Dus dat gaat helemaal...
Ja, ik zie hem ook al opkomen, ja.
Ik vond het
Oké, nou dank.
Ja, was leuk.
Helemaal tot ziens.
Heel goed.
Tot gauw.
Goed zo.
Hoi.
Hoi, hoi.